You gotta be flipping my flapjacks. Last night I posted this on my X page. I said, can I take your order? I was working at McDonald's. But then after today, I officially quit my job at McDonald's. We're looking good, ladies and gentlemen, okay? All right, in all seriousness, we got a lot to get into here today, okay? We're gonna talk about a lot of stocks, opportunities I see out there in the market. A lot of people are curious. Today's insane bounce, which it was massive, right? Look at the Russell Wilson, up 3.6% here today. IGV, the software ETF, up 3.5%. The Dow Jones Industrial Average up 1,200 points. People are like, is this real? Is this just a dead cat bounce? Like, what's going on here? I'll share my opinion and perspectives on if this is real and lasting or not. Then I want to share another perspective on something very important I think everyone's missing out there right now, okay, in regards to where the market's headed, the economy's headed, all those sorts of things, okay? After we get done going through that, 50 minutes ago, Tom Lee went on, spoke about his views on the market, crypto, all that good stuff. I want to react to that. They had all the big dogs on going on today on CNBC. Ed Yardeni Research, speaking about his views on the market from here. So looking forward to reacting to that one. And then we're going to get into Richard Bernstein here and his opinions on where this market's headed, all that good stuff. Okay, a lot to get into here today. It's been an action-packed week. It's been an insane week. I hope you appreciate me trying to keep you guys up to date with everything going on between this channel, the reaction channel, and then my main channel as well. I've been trying to keep you guys up to date. I've even uploaded a few shorts this week, all that good stuff, man. One thing, all I need from you guys, if you could just smash that little like button for me. I appreciate you. For everybody that's already done it, thank you for doing that. Additionally, make sure you got notifications on for this channel so you can be notified every time I drop a video, which, man, in this market, you never know. Like, things could shift in a second, and I got to release a 1 a.m. short. Like, you never really know what's going on, right? So, yeah. And then additionally, very important, first time announcing this, but the gold tier in my Patreon, it's the highest tier in my Patreon. That tier is usually $145 a month. We're doing a 1-day sale on Valentine's Day. Okay, that's just about a week from now, essentially. Okay, 1-day sale. If you want to get access to the gold tier for $49 a month, it's usually $145 a month, and that will include my Become a Master Stock Market course, see the stocks I'm buying and selling each week, access to that Patreon Discord chat, all that good stuff. Okay. That will be the pinned comment down there. You can click on that and put in your email, put in your number, and we'll either text over the deal or email over the deal when it drops. That's the only way you'll be able to get that deal because I'm not recording a video on Valentine's Day. I'm going to be with my wife. It's on Valentine's Day is on a Saturday. I'm going to be long gone, okay? So the only way you can get the deal is if you enter in for the deal, essentially. So do keep that in mind. And that will be the pinned comment down there, okay? Alrighty, guys. So, listen. Do we want to start with AMD? AMD. This is like the best news ever for AMD, okay? I mean, you know, first off, AMD's been an incredible stock over the past year. It's up 89%, right? That's very strong, like Donkey Kong performance. But listen, you hear Google saying they're going to spend $200 billion, right? You hear Meta talking about 115 to 135 billion. You're talking about Google saying $180 billion, right? Just understand this is a huge year for AMD. They get the 450 series out this year, right? A good chunk of that is going to end up in AMD's pockets. Not nearly as much as NVIDIA, but keep in mind, NVIDIA has like a $4 trillion-ish market cap on it. AMD has like a $400 billion market cap, right? They're not even remotely close to value the same. But a bigger and bigger chunk is going to start ending up in AMD's pockets as these future years tick on. And it's really good news. And so, you know, I think you either have to own NVIDIA or you have to own AMD or you have to own both. Like, you got to own it, man. I would feel so offsides right now if I didn't have $1 million plus in AMD stock. I would feel so offsides. You got to understand, we're going through a multi-year ramp period right now, right? Lisa Su's talking about, 35% CAGR top line for the next 3 to 5 years. She usually sandbags, so don't be surprised if that CAGR is more in the 40-45% range, right? The margins are increasing, and we haven't even seen 450 series yet. Oh my gosh. Can you imagine the margins? So you got to own one of those two stocks, if not both of them, right? I used to own NVIDIA. It did me well. I own AMD now. I think AMD is a far better performer. It's been a better performer, right? And, you can look at AMD versus NVIDIA since the whole tariff drama lows, right? And so let's pull it up here. And obviously AMD gave back a lot of gains here, okay? But look at the divergence from kind of that, lows time period. AMD's up 166% from those lows. NVIDIA's up 92%, right? So exactly what I thought was going to play out is playing out. And we haven't even gone into production for the 450 series. Now, I know the market's been complete risk off. No one's, wanted to even talk anything bullish about stocks this week. Okay, so let me go bullish on AMD. All right. If you're talking about a hype cycle starting in a stock, you could have a very strong hype cycle this spring in AMD. Right? And I know no one's thinking hype, no one's thinking excitement. It's just been risk off. Everybody's talking about bad in all stocks, right? But just understand, you could be about to go into a hype cycle for AMD. And the reason being is this summer, it's a question of is this June, is it July, is it August? But this summer is what? The 450 ramp. And there's going to be crazy hype in the spring. Whenever a company's getting to some big monumental thing, the lead up to that hype and excitement. AMD is one of the most talked about stocks in the market. I would call it a top 10 most talked about stock out there. Dude, the hype and excitement this spring for AMD is going to be insane as you get closer and closer to that 450 ramp. If next earnings, Lisa Su comes out with a banger guidance, this guidance was really good. She did this quarter, but it wasn't like an over the top, like, oh my gosh, it's game changing. If the next quarter she comes out with that sort of guide, right? And we know Lisa Su sandbags, so she's talking about ramp in the second half. What if they do start actually ramping toward the end of the first half? Has anybody considered that yet? That might not. Don't bank on that. But what if it happens? Can you imagine the hype and excitement that comes into AMD? All of a sudden, people realizing, oh my gosh, they're going to actually beat numbers next quarter, the next quarter, like way more. Woo! So AMD very, very bullish. I understand no one wants to talk about bullish things right now, but I just would not be bearish on these stocks. And also, guess what stock I stuck up for yesterday in last night's video? If you watched last night's video on the main channel, right? What stock did I stick up for in that video? NVIDIA. I specifically talked about NVIDIA stock in that video and talked about, that's a hard stock to get down much more than you already have it down. It was at like 170 yesterday or whatever. And I was explaining essentially, like, you're hearing all these CapEx numbers, the biggest winner is NVIDIA. And so any thought that like NVIDIA is going to miss numbers this year, it's out, right? Now, growth rates are going to decelerate for NVIDIA as this year ticks on, and same thing in future years, right? You can't keep growing at 100%, 50% clips. So that's going to come down, but the numbers are still going to be astonishing out of NVIDIA. And so I'm one to definitely stick up for NVIDIA and tell you that's a tough stock to get down much more than what you got down. With this sort of spending out there, let all of a sudden OpenAI raise their money, the $100 billion. What you got left? Right? We know Amazon's coming in with $200 billion. We know Meta's talking about 115 to 135, and we know Meta, if anything, they go over. As far as Bitcoin, Ethereum, for the market itself, that gave the market huge comfort. Basically, Bitcoin went down to that 60K level and bounced hard. Like it went down to 60K and bang, straight up like in a V. It was incredible. Like it seemed like minutes. It went from 60K straight up to like 63, 64. It was unbelievable, right? But that gave the market comfort. Don't think crypto has bottomed. And obviously, we're going to hear Tom Lee's opinion on crypto bottom here momentarily, but I would be careful betting that, for sure, like Bitcoin, Ethereum have bottomed, like it's just up from here for the rest of this year. Keep in mind, when you're talking about an asset class that's in a falling pattern, Bitcoin, Ethereum, those could bounce very, very short term here, and everybody starts thinking, okay, we're back on another bull run, or everything's okay, like the big drop's over, right? All for a month from now or a few months from now, a next big leg lower, right? And then a next big leg lower. And then next thing you know, Bitcoin's at 30,000. Once again, don't bank on it. Might not happen, right? And I'm placing no bets on if Bitcoin's going to 30,000 or where the bottom's going to be at or if we already hit the bottom. I'm just explaining that when you're talking about an asset like that and you think like it's over, like the bad stuff's over, it just comes back to bite you again and again and again, right? So don't see today's price action and think like, Bitcoin's just going to $1 million now, or Bitcoin's going to 500,000. It's over. Like, just understand things could easily go the other way. And so just something to kind of factor in regards to that. Okay. SoFi, this was, welcome bounce, 7% here. It was pretty unbelievable, that stock going under 20. Like, SoFi's at a place now that you wouldn't think that stock would go under 20, but you gotta understand, what is SoFi? Well, SoFi is more of a risk-on asset. And so with a stock like SoFi, when you had all the risk-on type assets selling off, SoFi got sold off as well. Elf on a shelf. I spoke about this stock in last night's video. Actually, toward the beginning of the video, I spoke about ELF and I spoke about Estee Lauder. And I'm talking about the video on the main channel, Financial Education is the channel name for anybody that watches this and doesn't follow that channel, okay? I spoke about ELF on a shelf. That's an incredible stock. Just a huge discount. Like, the price that was yesterday, the price it is today is a gift for people that are long-term investors. I listened to that conference call 1.5 times. The first time I fell asleep. I was like laying in bed listening to it. And next thing you know, I was like halfway through and I fell asleep. So I listened to it again last night while I was in the bubble bath. And guess what? Banger conference call. Anybody that cares anything about ELF, go to 1000xstocks.com, listen to the earnings call, or go to ELF's investor relations page and listen to it. Banger conference call. As far as Road, the expansion there, like that business sounds way stronger than management had expected, and then honestly even investors like myself expected. So the Road, we're going to see. I don't want to get my hopes up too much about this, but that might be the first celebrity makeup brand to really make it big time. We haven't really seen that yet. Obviously, Kylie Jenner was kind of, I would say, a very influential person in building a great start to a brand with her Kylie Cosmetics years and years ago, right? And that was like taken off. But I feel like that's never really gone big time. With what Hailey Bieber's done with Rhode, I think she learned a lot from maybe the missteps and the successes of what Kylie did with Kylie Cosmetics, and has thought about Rhode as way bigger than herself, whereas Kylie Cosmetics was kind of focused on Kylie Jenner, right? Rhode has a totally different name. It's not like she named it after herself or something like that. Like Hailey, she could have easily done that. And so, very bullish, and the margins are incredible. So, we got it. We got it, baby. Elf on a shelf. That's going to be a fun stock. Oh, and they're also doing some marketing in the big game upcoming as well. It doesn't sound like they got a national ad from what I heard, but they're doing a lot of marketing around the game, from what it sounded like, at least to me, right? Celsius, buying opportunity. Palantir, as I told you guys last year, right? I said Palantir is kind of stuck in the 125 to 200-ish range for the next few years is what I've kind of foreseen. And it kind of looks like it, right? Like that's just where it's kind of stuck. And when things go really bearish, they'll send it down to that 125 range. And when people are feeling real bullish, they'll send it up to 200-ish range, right? And so that's just kind of the dynamic we have playing out at Palantir. And the numbers are incredible out of the company, right? But the valuation's high. We know that. And also there's a dark cloud around it in regards to a whole bunch of stuff I don't even feel like talking about right now. Wynn Resorts, yeah, that's going to be interesting later in the year. And the reason Wynn's going to be interesting later in the year is next year in 2027, they're supposed to open the Middle East property, which is going to be incredible, right? And so that's one you could see hype come into late this year, maybe even early 27. So do keep that in mind because, yeah, we know that property is going to do numbers. We just don't know how incredible. Estee Lauder, huge buy the dip opportunity. Like anything under 100 on EL is a steal deal. Steal deal. It's still insane they pushed that stock down so far last year, right? Like that should have never happened. Look at this. They sent that baby all the way down to 49 Chinatown. Let's see Elf on a shelf. Let's pull up Elf. And Elf, I think, got sent right down there as well, right? Didn't Elf get sent to, let me pull, I swear Elf got sent to 49 as well. Or am I tripping here? This is kind of insane. I don't need Elf against Elf. Let's see. Yes, it's insane. Elf and EL both got sent to $49 at the lows, right? Incredible. Silly. Now, you might say, okay, what stock do I like better out of Elf and EL? Elf I like better than EL. Both stocks I like a lot. Elf has more upside potential though. Like Elf, we're talking about a company that has, 10 years of massive growth ahead. EL, I just kind of look at that as like a consistent growth company, more of a value stock, great brands, much smaller customer base than somebody like an Elf could have, because EL, their products are expensive and most of their brands are expensive, although the Ordinary, one of their brands, is a little cheaper. Elf, look at the products at that company, and even the other brands they have, most of their products are under $20 and a lot of them are under $10, right? So everybody can be an Elf customer. You could be rich, you could be middle class, you could be, not doing too well financially. Everyone can be Elf's customers. If you wear makeup, that is, and skincare and all that sort of stuff. EL, that's just not possible. EL is really catering to the top, I would say 20% of income earners, the top 20% of wealthy, right? Revolve made upward move. Honest is a steal deal. It's a $2 chuck. You got to be flipping my flapjacks. Like, I'm just gonna be honest with you guys. Fubo should not be $1, and Honest should not be $2 right now. Those are just disrespected stocks, right? Very, very disrespected. Silliness. Still a lot of weakness, obviously, in big tech. Amazon got hit hard today. Google got hit hard. Meta got hit hard, which sends me to my next statement, because you're going to understand, and this is a message I sent out to my private stock group members. We're now well over 3,000 members in the private group. You're going to understand the ramifications of this insane amount of capex out there, right? And what it means for the stock market, what it means for the economy, for companies, for all those sorts of things, right? Because everybody's just kind of thinking about it from a perspective of, oh my gosh, they're spending so much money. Are they going to get this money back? And that's a fair way to look at it, right? 100% fair. And I'm looking at it that way as well, as somebody that's invested heavily into Meta, heavily into Amazon, and then Google. I got a position in Google, but it's not like, anything crazy. I think it's like a low 6-figure position, right? But here's what I posted, okay, inside the private group. And, this kind of tells you a little bit more about thinking bigger picture here, right? I said, and I posted this at almost 10 o'clock last night. I said, we have these big tech companies spending a fortune on CapEx. We all know this. The good news is that massive amount of money is at least being spent in the economy rather than just on share buybacks, which do nothing but help EPS. The fortunes of money are being spent on chips from companies that employ large teams of engineers. The chips are being built at TSMC, usually, facilities which employ many people full-time, an insane amount during construction. Like, I remember the TSMC initial facility, it was built about 10 to 15 minutes away from an Arizona house. I have a rental property that, we used to spend some time in as kind of a vacation home. And my gosh, like, the construction teams on that project was ridiculous. I tell people it's like building an NFL stadium, but way more complicated. Way more complicated, and actually even to a bigger scale. Like, it's ridiculous. Like, if you've never seen one of these TSMC facilities up close, go visit that Arizona facility sometime. You'll be like, what the heck is this thing? This is insane, right? And they're building a bunch more. They're supposed to build a bunch more around there as well as adjacent companies. All that construction needs tons of materials and machinery, which produces a multitude of jobs. We could keep going down the list. Moral of the story is, it's great for the economy, and it's far better use of capital toward the economy than share buybacks. A better economy the next few years could mean more robust consumer spending at restaurants, vacations, on homes, etc. All this CapEx doesn't just disappear into thin air. Like, people hear Amazon say they're going to spend $200 billion. I think it just goes to Mars. It goes in a company's and workers' hands. This subject's underrated and should be talked about more, right? And so that's why when you look out there, right, have you noticed something very interesting? Let me show you something very, very, very interesting here, okay? Look at that chart. I'm showing you Cheesecake Factory, cake stock. The stock is up around 20% so far this year. 20%. It's a shocking number. Let's compare that versus my big tech stocks, let's say, for instance, right? We know I love cake. I've been buying cake for the last several years. I started buying that at, in the 30s. It's been an incredible stock. It's going to be a much better stock in the future than it's even been in the past. But look at this. Amazon's down 7% so far for the year. Meta's up 1%. Google's up 2%. And cake's up 20%. Good old boring cake, right? Well, why? Well, people are starting to understand the story around cake and flower child opportunity, the North Italia opportunity, and the margin story and all those sorts of things. But you got to understand, when these companies are spending fortunes of money, it's a huge boom to the economy. There's no other way around it. Do you know how many people end up making money indirectly or directly from this ridiculous sums of money that are being spent out there. The worst thing big tech companies could do for the economy would be they make these fortunes of money from their Amazon business and from Google and from Meta, and they just stack the cash on the balance sheet, right? What good does that do? It might do the shareholders good in terms of you feel more comfortable investing into it because they got stacks of cash, but it doesn't do anything good in the economy. It would be like you're a wealthy person, right? Okay, so let's say me, okay? We'll use me as an example. All right. So let's say I make a lot of money. All right, I make money from YouTube and from 1000X and Patreon, blah, 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 right? And let's say instead of me living the lifestyle I live where I go buy a Ferrari, I go on nice vacations, I give money to charity, I spend money on new homes and construction, and I hire landscapers and all this stuff, right? I got a very expensive lifestyle. Let's say instead of that, I just hoard it all right in my house, right? I live in an apartment. Let's say me and the kids, we live in like a 2-bedroom apartment. We drive an old car, right? We didn't buy the Model X last year like we bought from Tesla, brand new, right? None of that. Let's say I just hoard all the money. I could do that. I could probably have more money, I guess, but I don't think I might not enjoy that. My family might not enjoy that. And you know what? It's not good for the economy. Every time I ever see somebody point a finger at a rich person and say, you shouldn't buy that yacht, you shouldn't do this, you shouldn't be spending all that money, I'm like, what are you talking about? Let them go build a yacht. You know how many people are going to make money off that flip and flapjack and yacht be built? Let them go build the yacht. let them, you know how many crews are going to have to be on that yacht and maintain it? And you know how many people are going to make money off? Let them go build their yacht. Oh, you shouldn't have a private jet. Let them go have a private jet. There's going to be a lot of people that make money off that. Oh, you shouldn't have a, big house. Have a big house. Get ready to hire a lot of housekeepers, right? So the worst thing you can do is have companies or individuals that just make money and then just never spend it. Because then you're taking that out of the economy. When everybody's spending the money, we can all have fun, right? And then this guy can afford to go buy services over here, right? If I make money and I go to the restaurant tonight, right? The restaurant gets to make money off that. The cooks in the kitchen get to make money off that. The waitress gets to get a tip off that, right? They get to go feed their families, pay their bills, and do well. That's the economy. And so understand, on an individual basis, it's important. And on a company basis, it's way more important. If Amazon wanted to just stack $200 billion to keep on the balance sheet, what good does that do to the economy? Go spend that $200 billion on all this crap, all this construction. And then obviously, hopefully, those companies can get the payback on that as years tick on, right? But if we could talk about a much stronger economy, guess what? That's more money than Meta can make from advertising, because people have more money, companies will have more money, they can spend more on advertising, and Meta's growth rates can be better. People have more money to spend on Amazon. So instead of just getting like base need related stuff on Amazon, they might be able to buy some stuff that is more wants than just needs, right? And you can go down the whole list of them. So that's an important thing to keep in mind here. So you get a huge boom in the economy, even though shareholders might not be happy because they could just spend all this on share buybacks, which is usually what a lot big tech, if you know big tech companies, what they usually have done is they stack crazy cash, right? And what's the other thing they do? Huge share buybacks. That's what they do. Some will pay out dividends, but it's usually little money. It's stack cash, big buybacks. That's what they do, right? And now they're spending the economy. I say bravo. I'd much rather have a much stronger economy, people doing great out there. All of us need to root for each other, right? I want you to be doing great. I want you to be making money from your stocks. I want you to be making great money from your job. You should be rooting for me. I root for you. We all root for each other. Because if we all root for each other, we can all spend with each other, right? We all support each other. That's what can happen. If we're all doing bad, then no one wins. If I don't have money, how am I going to go spend money at your business you work for, or your company you work for, right? Or your own personal business? How am I going to go do that if I'm doing bad for myself? If you're doing bad, how are you going to afford to get the Patreon deal? How are you going to afford to get 1000X if you're doing bad? If you're rubbing two nickels together? We don't do any, we all got to be winning. if like people are losing, like, okay, like it's not good for us. It's not good. So that's a point that I think is way overlooked in regards to this whole subject. Tom Lee.
Speak with not only for Dow 50K and the jump back in tech, but also as the chairman of Bitmine. Tom, I know you're watching what's taking place in crypto. We're talking about a 7-month low for the stock of Bitmine. The Ethereum paper losses, $8 billion. Is this in jeopardy of going into a pretty dark place?
Hi, Scott. Thanks for having me. Bitmine is designed to be a vehicle that tracks Ethereum prices, but on the upswing, because we're adding Ethereum, will outperform. So Ethereum's in a drawdown. Bitmine's going to be in this drawdown spot. Bitmine has no leverage. It has roughly 4.3 million Ethereum that earns 3% annually, and we have 600 million cash earning about 4% in money markets. So the company is making about $1 million a day. So there is no risk, no need for the company to actually raise money because it's debt-free and actually generates about $360 million a year in net income. I think crypto sentiment is rock bottom because it has been a terrible drawdown. I mean, just the past 10 days, Ethereum's down 40%. And that's triggered, I think, a lot of concerns about whether crypto is...
Okay, let me push back against Tom Lee here. In regards to, by the way, good job of him sticking up for, the company he's obviously involved with there and, kind of point out their cash position and lack of leverage and things like that. Bravo to him. But in terms of sentiment, he talks about sentiment is at a bottom and those sorts of things. Listen, sentiment's at the bottom for crypto when no one wants to talk about it. Still, a lot of people want to talk. Like, I went on X here today. Everybody's talking about the bounce back and talking about like, oh, we were up some, but we're still down so much. Like, I'll give you a good example. Like, obviously, Bitcoin, Ethereum, it kind of bottomed out there end of 2022. No one was even cared to talk about Bitcoin, Ethereum. Like, it was almost like embarrassing if you even try to bring it up, right? Like, don't even talk about it. A lot of people still talking about it. Like, a lot of people. And so you're usually at a bottom when no one's interested, no one wants to talk about it. And a lot of times the same with a market, if you're actually going through a bear market, usually by the end of that bear market, you're at the end when almost no one even wants to talk about stocks anymore, right? Like everybody's so down and out, they're kind of like over it. Like the crash period already happened, and every time like people thought the market was coming back or bottomed, it just went lower. And by the time you get to the end of it, like no one even wants to talk about it. And so that's what I'll say about that. So sentiment can get a lot worse from here. And, let's say hypothetically, Bitcoin, Ethereum keep trying to play this game of like coming back and then they just go lower, right? And then they come back a bit and then they just go lower. And let's say that lasts all the way to the fourth quarter. By the time you get to the fourth quarter, no one will want to talk about Bitcoin. No one will want to talk about Ethereum anymore. And that's when you'll actually get the real deal Holyfield bottom there, okay? But we'll see what happens.
Bible. But, all of those statements that I just heard from just a minute ago, I heard the same thing in November 2022 after FTX. And that's the reality, that crypto is sort of characterized by hypervolatility and big drawdowns. I mean, just in the last 8 years, Ethereum's had 7 drawdowns of 60% or more. The good news is 7 of those were all V-shaped recoveries. So we had a waterfall decline. If crypto's bottoming now, which it kind of looks like it is, especially given MicroStrategy's 25% move, the recoveries are V-shaped. So we recover as quickly as we've fallen.
Just want to follow up on that. Where you suggest there's no risk to the company, is that assumption that Ethereum has stopped going down, that this is a bottom? If there is what some have predicted to be a coming quote-unquote death spiral for certain cryptocurrencies, if the situation with Ethereum gets worse, what happens here?
Well, yeah, I mean, it's a fair question. I think we can look at metrics, for instance. If you look at the number of active addresses on Ethereum, it's up 117% versus a year ago. In fact, in just the last 3 months, that's actually gone up parabolically. As you know, coming out of Davos, what was the big story around what Wall Street plans to do? It's tokenization, which is moving a lot of their financial infrastructure onto the blockchain, Scott. That's not going to change just because crypto prices have fallen. But what is the blockchain that is evident, listed, named by whether it's UBS, Standard Chartered, or Fidelity, where they're tokenizing products? It's on Ethereum. So Ethereum is not in a death spiral because the utility is going up. The price, of course, has been awful. Unfortunately, crypto prices are volatile. It's not like earnings estimates change for Ethereum. In fact, network usage is up 80% in just the last 6 months. But it does mean prices move a lot. I mean, it's sort of a feature of crypto itself.
So the most painful thing that could happen here with Bitcoin and Ethereum, and the thing where you really get sentiment to just go awful, is have these bounce backs come, investors pour money in, Bitcoin's back, Ethereum's back, we're going higher, right? Always just be let down, and it goes lower. And then starts to bounce back, and then each time the comeback is weaker because people start doubting more and more and more, right? And then eventually you just get that last just brutal waterfall sell-off, and that's usually when you reach a bottom, right? In regards to at least Bitcoin and Ethereum. And those are really, at least from my perspective, like if you're going to own anything in the space, like, those are really the only two worth owning. Bitcoin is more just from a standpoint of like digital gold, if you want to look at it from that standpoint, right? Obviously, back in the day, people used to talk about, everybody's going to be transacting in Bitcoin. That obviously future has not come. But from I get it like a digital gold perspective. There's only 21 million ever in that perspective. Ethereum's more of, I think, a use case based one. And that's been a strong case for years. Maybe it's getting stronger now, but, the bottom line is you want to create the most pain. Just have every bounce end up eventually going lower. And then people will just be, by the time you get to the fourth quarter, people will not even want to entertain the thought of conversating about Bitcoin and Ethereum. They'll be so
top
down
level
and down.
Thoughts about the market today. What do you think is going on?
Happy days are here again. I mean, across the board, everybody's buying, not just stocks, but Bitcoin, gold, and so a lot of asset classes are doing extremely well. And I think a lot of that has to do with all the spending that these hyperscalers are planning to do. $650 billion this year is going to be very, very stimulative to an economy that honestly doesn't really need to be stimulated. We also have refund checks that are coming that are going to be very large.
Yeah, it's amazing to contemplate. So here's what's ironic. So Amazon shares are down 8%. Our guest last hour said, they're a little behind as far as he's concerned and need to spend this $200 billion figure to catch up. The rest of the market is cheering. NVIDIA's up 7%.
Exactly.
Everything in the AI value chain is great. We're thrilled. Glad to hear it.
Nobody's talking about a recession, and the only question is how big a boom are we going to have from all this?
Right.
Yeah, the Atlanta, what is it? The Atlanta GDP now, I know it fluctuates, Ed, but it's showing about a 5% GDP growth. And I think you're touching on a really important topic because we like to keep things simple here. We say, okay, Meta or Amazon is spending $1 billion on a data center. What we don't talk about is that there's probably 500 to 1,000 vendors, different companies inside of every.
So Trump, I always like to look at these things as objectively as I possibly can, right? As somebody that doesn't vote for the political party. If you watch my channel for years, you know that, right? I just look at it as from their different standpoints. Trump is getting a lot of what he wants in terms of trying to create a very strong economy and economic backdrop for the next 3 years. He's getting companies, all these big tech companies, to spend a fortune over the next several years, right? Which is, once again, very stimulative to the economy. He's getting a situation where, with the big, beautiful bill, that should really start to impact in a positive way the consumer as well. He's also getting inflation to stay at bay, which is something very important because it's okay, let's say the economy is really strong, but inflation's out of control, and you got 5, 6, 7, 8% CPIs. Are you really doing any better? No. But if you can keep that CPI under 3% while you have an economy that strengthens considerably, now we're talking, right? Now we're talking about an economy where people feel great again, right? And you see, for the last several years, the I mean, the consumer sentiment's been about as bad as you've ever seen. If you want to talk about fixing that consumer sentiment over the next 2 or 3 years to getting a great consumer sentiment again, have inflation be dead while the economy is extremely strong, and you'll see those sentiment numbers skyrocket from here essentially and get back to where they were kind of in like 2018, 2019 before you obviously had the Rona crash, right? So now the last component Trump is trying to get, we'll see if he's able to get it, but Trump wants to get housing moving. And the only way you can get housing moving, I mean, there's two ways. One is the economy much stronger, but that's not really the way. You got to get mortgage rates lower, right? In order to get mortgage rates lower, he's really got to get that 10-year lower. But the problem is if you have a strong economy, then usually there's fears about inflation. So to get that 10-year a lot lower is a difficult challenge. So he's been able to do quite a few things that you want to do if you're going to try to set up a really strong economy for the next 2 or 3 years. But that last component, that's going to be difficult. If he can do that, then you can talk about the real estate market's also moving, and then you got an overall great economy. If you get real estate moving, plus jobs are there, wages are strong, right? Overall spending's good, and inflation is, in a lower place, let's just call it. Banger, right? You got a banger for 2 or 3 years. We'll see if he pulls off the real estate one. That one I'm really, really intrigued with. That might be the biggest challenge of all.
Data center, whether it's the steel company or the concrete maker or the computer company or the wiring, the company makes the wires, that trickles down across the board. It's a huge stimulus to the economy.
Well, the economy, first of all, has been amazingly resilient since the pandemic. I mean, since the pandemic, we had a 2-month recession, and it was engineered by the government. They shut everybody down. They locked us up. Ever since then, it's just been up, and away. I mean, think of everything that's happened. We've had the pandemic. Then we had the supply chain disruptions. Inflation soared. The Fed raised interest rates. We had tariffs. And here we are, all-time record high in the markets. And the economy absolutely booming at an all-time record high.
You have to think a couple of things. I mean, one, falling interest rates now are helping ChatGPT, AI.
It helps, sure.
You guys called this, a few months ago and said, look, the AI, while this investment is great for the broader economy, the Mag 7 are turning on each other. I love how you put it. So they're no longer little kingdoms with their protected moats, each in their own lane.
Game of Thrones.
Game of Thrones.
Yeah.
So do you have an opinion on who emerges triumphant, or is the point that we have to
I think that's what's so exciting about it. It's like for one day it seems like one of the hyperscalers has an advantage, or one of the LLM model makers, and now OpenAI comes back with, well, we'll call your shot here and do better than you. So there's a lot of that going on.
Here's what makes me the most optimistic about the markets, and I'd love to get your take on whether this is the right view or the wrong view. Amazon, to your point, down 8% today. Amazon has actually not made investors money in just over about a year and a half. Wow. The stock's kind of the same price it was in the fall of 2024. Right. NVIDIA hasn't made people a lot of money. I'm talking about investors, not day traders, in about 9 months. Mm-hmm. But the markets have done well, even with some of those stocks not participating.
Very impressive, right? Because for the past few years, there's been this concern that the concentration of the market in just a handful of stocks made it very vulnerable to a bear market. It's like, lo and behold, if something terrible happens. I mean, we had DeepSeek as a stress test. This is sort of a DeepSeek moment where people are once again assessing, is all this capital spending actually going to be profitable? I think it's going to be profitable. I mean, these are smart companies run by very smart people, and they're looking at their dashboards. Oh, my God, we're running out of capacity. We could be making a ton more money if we just build that capacity. And everybody looks at all that spending relative to today's cash.
Yeah, I mean, he's fair. He's led by the best, some of the best business leaders in the world. And you see a number like $200 billion. Understand, I know Jeff Bezos is not the CEO of Amazon, hasn't been for several years, but they're going to run a number like that by him before they're going to do it, right? From what I've heard in some past Bezos interviews, he's still actually really involved with Amazon. Not in terms of the day-to-day operations, like day in and day out. I think he likes to float on his yacht and those sorts of things, but he's still way more involved. What it sounds like is he's way more involved with Amazon than I think people realize. And so you want to understand, there's no way Amazon did that $200 billion number without Bezos' approval. There's no way. There's no way. And so, you got to put, as tough as it is, and I spoke about this on the main channel last night, as tough as it is, you got to put your faith that they know what they're doing, because damn it, they've done a hell of a job knowing what they're doing, right? Doubted a lot of their spending, but these guys usually come through in the end. Do they not, right? So something to keep in mind.
But there's going to be a lot more cash flow down the road.
Are you long-term? So a lot of people who've been in these names are worried when they hear something like the Mag 7 and think this is a fight to the death. And if we don't know who's going to win, maybe I should move to the sidelines. What is the time? If you're hanging on for the long run, it sounds like you're saying it's not a problem. This is just kind of a near-term.
Yeah, this is just a near-term issue. I think, look, the Magnificent Seven can't be magnificent without selling all of their technologies to the impressive 493 in the S&P 500. I was just asked recently about the Dow, kind of an old-fashioned kind of index, and it's doing extraordinarily well. To me, that's kind of confirmation that all of this is going to be is already and will continue to be very positive for the economy. If it's good for the economy, it's going to be good for all these companies. All that's really happened is we're seeing more competition in the technology space. And technology, I mean, they literally eat their young. As soon as they create one product, they're already working on destroying it by coming up with another product. That's just the nature of the business. And by doing that, they keep their margins up. So I'm not too worried about technology, but I did think that it got a little overdone there. And so I did call for a bit of a relative correction and a broadening of the market.
So the biggest question here, in my eyes, is how high are the growth rates going to go in terms of revenue? We're seeing from almost all these big tech companies accelerating revenue growth. The question is, with all this insane spend, how high are the revenue growth rates going to go, right? Because I feel like we've been accustomed to thinking about Meta as a company that grows revenue at, let's call it 15 to 20%, but now they're doing much better than 20% numbers, right? They've been at like 25-ish, 24-ish, somewhere around there. Could they keep putting that up? Could they do a 30% number? Like, I don't know. Like, maybe it's possible, right? Amazon. Amazon, people are starting to become confident like Amazon was only going to be a 10%-ish grower as far as revenues go. Now, this latest quarter, they were at about 14%. Could we get Amazon back to 20% plus growth rates? I don't know. Like, we'll see. But maybe they could be going back there, right? And then what does that mean for their longer term margins, profitability? Could Amazon ever grow at 25% clip again? I don't know. Maybe it's possible. Like, we just got to see, right? And I think that's the interesting thing about this moment is people are thinking about these companies as still growing at the same growth rates they're at, but spending this insane money. But it's like, what if these companies a year from now are growing way faster than what they're growing now in terms of revenue growth, right? And it's off of a much bigger base at that point in time. But if you talk about an economy that gets way better, right? Simultaneously, their business expands rapidly because of their use of AI spend. That is where things get very interesting, ladies and gentlemen. Very interesting. And it is something to consider, right? I don't think the market's looking focused on that right now. I think it's more focused on just like, oh my gosh, they're spending so much. But if as the quarters tick on throughout this year, these companies keep accelerating revenue growth, that's going to become a bigger story, and you'll see a pile back into Mag 7 type stocks. So just something to keep in mind, but we'll see. We'll see, right? All right, next up here, market broadening is very healthy.
Clear of, I have to imagine you're loving the cyclical story here. Why do you think the market's doing so well today? What did you make of the Amazon quarter? So many questions.
So I don't know where to start, Kel. I mean, I think the broadening of the market, we've argued for some time that it would be extraordinarily healthy if the market broadened. And that's really been going on since the end of October, more or less. I mean, fits and starts, but it really started in October. And I think that this is very healthy. I think people don't realize how strong the overall economy is. Nominal GDP last quarter was over 8%. Wow. Excluding the post-pandemic, the United States hasn't had a nominal GDP quarter over 8% since 2006. Wow. It's been 20 years. So why you would have a narrow market when you've got GDP, nominal GDP over 8% is mind-boggling. And so what you're seeing is actually the market begin to broaden in acceptance of the economy, and the corporate profits are turning out to be much stronger and much broader than people thought.
Is there any of the Mag 7 you like here? You know, NVIDIA is up 7% today.
Well, Kelly, I'm going to beg off on the question because we are very much a macro firm. And one of our stories has always been that we don't know anything about Coke versus Pepsi. And so I will say I don't know anything about Microsoft versus NVIDIA as well. I can tell you that the key thing, and I've said this many times with you before, that the key thing for the Mag 7 is that they are fine companies. They are not unique. There are many companies in the United States and around the world that are growing as fast, if not faster, than the Mag 7 and are a lot cheaper. So my question would be, if you can get 20, I'm going to make up these numbers for a second. If you can get 20% growth for 40 times earnings and 20% growth for 20 times earnings, why in the world would you not take the 20% growth for 20 times earnings?
And where are you seeing that kind of profile? Now, for instance, Eli Lilly earlier this week reminded us they've got...
What? Sir, in all due respect, have you seen Meta? Last time I checked, they got 20% plus growth. And where's their forward P at right now? 20? You got a 2020. Doesn't take 2020 vision to see that one coming, huh? Dang, that was a bar. Oh my gosh.
They've got 40% revenue growth. They've got 40% operating margins. That's a $1 trillion company. Where are you seeing places that are as fast growing? 20+% as you mentioned, but trading. I mean, Microsoft's trading at like 20. I'm like, the company you're describing sounds to me like Microsoft.
So, Kelly, I'm going to sound extraordinarily boring here for a second. And I'm just going to say, if people are willing to look outside the United States, you will find earnings growth is accelerating in many parts of the world. It's not that U.S. earnings growth is imploding. It's not. It's actually kind of leveling off and maybe coming down a little bit. But outside the United States, you have profit cycles that are actually coming up. So you're getting, I don't even think you have to be very sexy about this. You just have to have non-U.S. investments. Most U.S. investors have zero in non-U.S. So I think this is a pretty easy thing to figure out, that when the non-U.S. markets are 35 to 40% of the global equity market and U.S. investors have less than 10%, I don't think we should worry about a specific stock or the optimal weight of
what a back out. Ugh, what a back out. He's talking about all these companies trading at 20 times P's and got 20% growth, and she puts them on a spot. Okay, tell us about one. It's the market in general. Dude, that's like saying, hey, I could beat you in a race. And you're like, no, you can't. Let's go race right now. We'll go out to the street. Let's go see let's go race right now. Okay. And I'm like, no, actually my hamstring kind of hurts. So no, I can't race. I'm not in the race shoes right now. I can't race. You'd be like, what? That's what that dude just did right there. Talking this big game, and then he gets put on the spot, and then he's like, we shouldn't really worry about, like, what are you talking about, dude? Where are all these stocks that are growing revenue 20% plus, earnings 20% plus, and are trading at 20 Ps? Show me them. Where are they at? Oh, wait. He's talking about international stocks that are, dude, most of these international companies are trash. Are you kidding me? They have trouble even growing their businesses. Never mind growing revenue and EPS at a 20% plus clip. Trading at 20 Ps? Show me them. I'll wait. Come on, man. That's just ridiculous. I kind of don't even want to watch the rest of the clip, but I'll do it.
It's just, do you have any non-U.S.? And I think that will solve the problem.
I always worry a little bit about the dollar. Do you think that's just the moves you're describing?
I'm done with him. Okay, I appreciate y'all for joining me as always. Thanks so much for being here. Once again, deal coming on the gold tier. That is coming up here in a few days. Pin comment down there to enter in your info so we can send the deal over. Once again, that's the only way you'll be able to get that deal, because I will not be recording a video on Saturday for when that deal actually comes on Valentine's Day. So if you want it, click the pin comment down there, put in your info. We will send it over when it drops. That it will be $49 a month for that tier, which usually that's $145. Okay. All right, guys. Appreciate you. Much love as always, and have a great day.